What's your take here? Because it seems like, that back and forth, he said, she said, on whether the Straits of Hormuz is open. President Trump just came out and said, hey, he had 19 million barrels flow through on Monday of crude oil. I mean, is the market looking past all the geopolitical risks that might come up over the next 60 days and just comfortable with things as the way they are progressing?
Well, yes. Good morning, Tom. Yeah, I think I'd have to agree with you. I think the market looked past a lot of that risk because the peak never got to where we expected it to be. A lot of people were looking for $150 or even higher numbers. We never saw that. And now here we are back, WTI this morning, just nudging 74, Brent $4 premium to that. Kind of where we think the risk premium is going to stay now for a while, because if it gets much cheaper, we're going to see people who need to resupply. Everybody needs to resupply, right? The SPR is down to 380 million barrels, should be 700 million when it's full. The whole world is short in storage. So most of us think that when the price gets down about where it is now, WTI at a floor of maybe 75, Brent $4 or $5 higher, then buyers are going to step in and resupply. So we think this is the market we're in for a while. Interestingly, for the Strait, it's not just about politics, right? It's still about ship owners, insurance companies, customers. And so that takes a long time to unwind. Sure, this has been a great week, but we're a long ways from being fully effective again in getting our shipboard traffic where it needs to go, delivering, going back, getting another load and resupplying. A long ways from that.
Yeah, and I think that's maybe the concern. I think everybody wants, hey, we want $60, $65 a barrel oil again now that the Strait's open. But because of the fact that everybody's depleted their resources at this point, but part of the oil shock probably hurt the rest of the globe a lot more than it has us. That energy independence that we have at this point. Do you see that continuing to play out, where now that we've had this shock in crude oil markets and energy markets, where all these other countries got to scramble now to figure out ways in case this happens again, right?
Yeah, to your point, and I've said it from the beginning, this has been a very different event if you're an American versus if you live in almost any other place in the world. For us, it was a supply shock, but it was really more about price. We always had the supply, particularly as this conversation goes beyond gasoline, diesel fuel to natural gas and propane. But I do think the rest of the world's just not as fortunate as we are with this robust system of developed natural resources for gasoline, diesel fuel, natural gas, and propane. What we're seeing everybody else focus on now is, one, getting their stocks back built up, two, rethinking the choke points, right? The choke point that's been so obvious is the Strait of Hormuz, but it's not the only one, right? There's another set of straits. There's the Panama Canal. So you're seeing countries begin to think through their relationships, where they get their energy, perhaps what's a longer term solution. And you're going to see a lot of shifting. Interesting, in the last month, I've even been surprised at how many countries are turning back to coal. We all thought coal was completely dead as an energy source, but once again, lowest BTU, perhaps the lowest geopolitical risk, back in vogue in many parts of the world.
Yeah, and the energy markets as a whole, whether it's natural gas, whether it's propane, when you look at it, the future looks pretty bright for this segment, just due not to just these shocks that we see with with the conflict over in the Middle East. It's also energy production and the need for these companies to have energy and to kind of supply power and energy to the data infrastructure build out, right? So it's a pretty rosy picture for you, right?
Well, certainly. I mean, the U.S. natural gas and natural gas liquids market, of which propane is a big part, is completely robust. You've seen in the last 24 hours, Chevron, Microsoft team up in a really strong data center deal in the Permian Basin. It's a win-win for Microsoft and Chevron. You're also seeing the Japanese energy group, JERA, come back in to the U.S. in a $3 billion nat gas deal with an unnamed data center. So for us in the propane industry, we reap the downstream benefits of that, because I think natural gas will be a lot of the power generation for these data centers. But that gap from the residential consumer all the way up to the data center customer, so all of those commercial, industrial facilities in between, a lot of them will be turning to propane produced power as well. And to your point, it's an absolutely wonderful time to not only be a U.S. citizen and reap the benefits of this natural gas and propane dominance, but as we think about cleaner energy, cheaper energy, it's beginning to play out just as we thought it would, perhaps even a year ago.
Yeah, and with more supply coming online now that the resolution of the conflict is in place at this point, and hopefully gets done over the next 60 days. I mean, are there any areas that you're looking at here? I mean, do you see crude oil going back to 80 and maybe stabilizing, because it's not that elevated on a historical basis if it's at $80 a barrel, and the economy can probably sustain that?
I think if we can keep that geopolitics kind of tamped down a bit, then I think we're at the right numbers right now, between 75 and 80. Harold Hamm came out and said himself, I think 75 is way too low. I think the number is more like 80. But still, that's a fairly tight range. And I think that's where we're going to be for the next 6 months. If we start getting the system resupplied, I think you'll see it drift even lower. Nothing on the horizon right now. China has demonstrated a really interesting ability to tamp down their demand if they needed to. They have tremendous storage. They were willing to use it. They went to alternative fuel, solar, coal, nuclear. And so you're seeing the big users exhibit a lot of restraint when the prices dropped up. We saw in the US quite a bit of conservation. I'm going to drive less. I'm going to use less energy. And so we think these numbers are probably pretty consistent, $75 to $80 crude, which implies gasoline about where it is today for the next 6 months. We're always at that point. We're getting into the summer. Natural gas may have a peak for air conditioning and power gen. But for those of us in the propane industry, we now kind of watch the winter. What's the agricultural situation look like? Nothing that exciting right now for us. So now we're just waiting to see what the next round of winter forecasts are. And that will be the next movement in propane prices, probably between now and fall.
All right. Great outlook here for the energy markets. Appreciate it, Tucker. That's Tucker Perkins, Propane Education and Research Council, joining us.